Welcome to this tutorial brought to you by To The Tick, and today's lesson is on the bearish continuation patterns. Now first, let's note that we have discussed all of these individually, and you'll find a video and text and chart samples on every one of them individually. But before going further, I thought I would do a summation of thoughts, review continuation patterns, the bearish ones, as a group, plus we're going to add some nuances and some tips that we might not have covered in the individual patterns, and we're going to look at this as a group of patterns, trend continuation, bearish, and we're going to see if we can find an edge as a group. So first, let's go to the Merriam-Webster's dictionary definition of continuation, and here we see that we have an act or a fact of continuing in or the prolongation of a state or activity. The resumption after an interruption, something that continues, increases, or adds, and related words, elongation, extension, lengthen, and stretching. Now, let's understand, we're talking about trend. And we're talking about trend continuation, and we're looking for downtrend. We want to see downtrend prolonging action, meaning prices is continuing to drop. We want to see it continue and add and increase to the downside, lengthen and stretching that pattern. We will allow for interruptions. We're going to get an interruption, and then we want to see the activity resume after we've allowed for that interruption. So the word interruption is like saying, let's look for those retraces. So again, let's make sure we understand where we are in the process at any given time, and we do that by looking at our history and getting a reference point. And today we're going to discuss those bearish patterns. Now first, we have to start with the pole. The pole, visually, when we look at price patterns, it represents the drama. It's the most important consideration for a continuation trade is the pole. It is the must-have for every continuation pattern, bullish or bearish. You must have a pole. You want the pole pointing straight down, which it's doing here to represent bearish activity. And what really creates a great pole? Well, we're going to answer those questions when we look at live chart data, and those will be over in our library reviews of continuation. But again, I'm going to keep coming back to researching that price action history for your instrument, because it is really the strength of trend, and the strength of your move will come from what you see there in that background. Where are you at any given time? We have to start our analysis with a reference point, and typically what we use in a bearish is a line in the sand of support where the bulls have stepped in, the bears continue to hammer and work on it until they finally get a big push in price. And as we watch these prices unfold bar by bar here, just like they would in live action as a trader, notice that the pole is about your drama. The pole comes down to a tip, which is the swing low price. It doesn't mean that things are over. It just means that there was enough interest at this price point to stop the decline. Now that's really all it means. But the first thing you have to understand is that we have now watched a new breakdown. We've watched an impulsive thrusting action that on your chart's going to stick out on your chart and be very clear for you to see. And again, it should stick out of that background action, and you want to see that as a reference point to see where we are right now in our picture. You want to see that history get altered with this new breakdown, and you want to see it being a surge in volume and in price all coming together to visually create that pole in your appearance in your chart, which you can clearly see it. And the more drama, the better. The more straight in line the price action, straight down, making new lows, the better. The faster it happens, the better. The larger the spread, the better. All of those things represent conviction by the bears. You're recognizing the pole for the energy and the trend control that it represents, and that's really paramount to studying continuation patterns. You need to learn what it looks like in volume, and you need to understand your background, and those are the main keys to understanding the pole formation. Since the bears have shown us this much aggression, we really want them to prove that they're going to remain in control by not allowing price to retrace or come back on the pole as much as 50%. So as a general rule, we look for that retrace parameter guideline to say no more than 50%. Now that also gives us our guidelines for stop placement, and our risk reward parameters start working as a general guideline from 50% of your measured value of your pole. The pole all by itself, being part one, also establishes our targets for what we're looking for to come next. We're going to measure the pole from the base to the swing tip, the swing low tip, and say we want to see a full leg repeat of the first move. We want to see that the bears are firmly in control, and we're looking for the pattern to prolong. Continue, right? Increase, add to what it's already done. And that's what our expectation is here. That's what we're looking for, a whole new explosion that's going to add another whole leg to the pattern. So let's look now at part two. Part two is the consolidation phase. And again, all of these patterns are offered in detail individually on the website. I'm the one that gave it its name, so I get to give it a name like that. But its apex actually is where it attaches to the pole, and it expands and opens outwardly. But the bottom line is they all have to have a pole. They all have a phase two that's outlined by the orange upper resistance line and a bright blue lower support line that are the immediate, meaning in the here and now, definition of support and resistance. Your big picture support and resistance is still there for you to be using too. But inside the immediate activity, this is what we have. We also see phase two as a consolidation, both in time and in price. We want everybody to take a breather. We want them to slow down and kind of recoil and regroup after expending all that energy that they use to create that pole. Trend direction visually established by the pole tip or lowest low, I need you to notice, is also the swing low in price. That's the common point. The point of attachment for part two of your pattern. And that's very important because that number ends up being a pivot point for you moving forward. Let's appreciate that the pole has already offered us part one, and we've already got the confirmation. We've seen it happen. Now we have the swing low tip, and again, it's a little different thought here, but once you get that first swing low tip, and you get that confirmation that indeed that swing high retrace is confirmed as your first swing high. From that movement going forward, from that moment going forward, you now have established your consolidation phase pattern. You have established the common point where all the action connects to the pole, that's with your swing low, and all of your price patterns in phase two needs to fit this activity with the swing low attaching to the pole. The swing high is the same swing high for everybody. Now, how many of the patterns might fit inside here? You're going, no way, lad. That's 8 patterns. No way are they all going to fit in there. Well, let's run through them real quickly. Here's the flag. Remember, the flags, parallel, near parallel, they need to fit inside your 2 to 3 swing structure, but basically it can be tilted. It can be tilted upwardly, downwardly, across. We usually think we get an edge if it's tilted opposite of the action. And again, the big brother pattern, the rectangle itself, same deal, can be tilted. It's just like a flag, just a little bigger. And that little short squatty pennant, look at it fitting in there, swing high, swing low. Little short squatty pattern. And the big brother, right angled symmetrical, it fits swing high, swing low. How about those other triangles? There's the descending triangle, it fits. How about that ascending triangle? It fits swing high, swing low. Are you getting a message here? And there's the rising wedge. Is it fitting? Yes, it sure is. And how about that wild looking tomahawk with that apex over on the pole side? Is it fitting? Tip high, tip low. Oh, I love it when they poke through. More aggressive pattern. Love that those little pokes through there. But yes, they all fit. They all have the common point of the swing low, and regardless of what comes next, your price pattern and your targets gets established once you've got swing low number 1, swing high number 1. From that moment moving forward, they will all fit. It doesn't matter what the eventual shape of the pattern of phase 2, we're going to be able to trade it in a similar fashion. And the first thing we get to do is get that repeated leg of the pole itself, looking for leg number 2. Again, the textbook guidelines definition for a phase 2, we need to have 2 to 3 swings, which means touches on each side, support and resistance. Notice we only have one of them at the moment, one touch on each side. Ideally, we get 2 on one side and a third on the other, the minimum creating the pattern. Then typically we can see as many as 7 swings in here. We like the price action to stay nice and compact. Larger rectangles, bigger triangles might take a few more touches. It's all about the time here, but basically, are you maintaining the structure? Additionally, that price action staying real tight is good for us, and we look for those triangles also to break somewhere between 50 and 75% of the way through their formation, and that's true of all the triangles. So basically, I like at least waiting. Third effort then shows me clearly what kind of pattern I've got, and it gives me my parameters already established for where my risk and reward might be. We want this to be a brief pause. Again, the definition of brief is about your instrument, and you need some history with your chosen instrument to be able to watch these patterns. Who are you trading with? What kind of patterns do they create on their own? But the point is, the structure is remaining intact. The structure is what you're trying to make money on, so follow the structure. Use your muddy trench as an intermediate guideline. Make them prove that they can get through it and work those targets and stop placements from that muddy trench concept. Realize that phase 2's structures is outlined early. You get to watch that pole creation, and you get to watch that first swing low and first retrace swing high made here. Sit back and wait for the pattern to unfold. Target inside if there is enough room for you. And finally, we get that middle ground targeting area right there if there's enough room in your pattern. Plus, finally, the pattern itself will give us another angle, and we're going to either use the middle trench apex as where to plant those targets, or more aggressively, we're going to add that full leg target to the breakdown once we can actually see the breakdown. Being able to see the pole and then watching and monitoring your volume about what happens next. You want to see that volume that created the pole very clearly. Then you want to see this pause in volume. Monitoring the volume is telling me when something's going to happen next. I want to see the buyers finally run out of gas. There's not enough of them with anything left, and I want to see the sellers stepping in, taking control the same way they did up there the first time on our first big breakdown. So we want to see those elephants not being able to hide what they're doing in the way of volume. You want the consolidation phases to look like a consolidation in volume. You want to get that look and feel. And again, the more history you have with your instrument, the better on what those price patterns are going to look like with that volume in the picture. And we want to see a whole brand new surge is what we want to see. Out of volume and price all the way around, get rid of everything they've got left, and then we want to see them come hard again with our second leg of our pattern. First and foremost, we accept the fact that all of our price patterns manage to fit in that same box. Note, number one, it does not mean that the gray dotted lines completely contained all the price action. No, that is not what it means. What it means is that you get to establish where the middle is. You get to establish that apexes. You get to establish where that middle ground is, and you're working conceptually with that area, that spread in price, looking for what might come next. Again, aggressive traders may have several trades in this pattern and enjoy trading a consolidation pattern for that reason. Trend traders that really want to establish themselves with a great edge are going to appreciate that everything they do above the muddy trench is setting them up for a potential great trade to be the full length of the pole. The triangular measurements and or the rectangle measurements are all about swing high, swing low. And typically we classically add that to the breakdown area. All of this pattern should still fit swing high to swing low. The pole with the thrust and volume, number one most important thing to realize, the consolidation is a pause, 2 to 3 swings. We look for that 7 being the maximum swings that we like. Usually by the time you get to 7 swings, you've lost a lot of your momentum. So again, it might be more of a dribbling kind of a pattern. Okay, the apex or muddy trench, work inside that 50-50 element if you so choose. Push and volume and price, again, is what we're looking for. We hope that it happens coming from the apex and or again coming from the breakdown, maybe even get 2 chances there. And our target measured moves, we've been through these, but we're going to add them to and from either the apex or the breakdown. Pole measurement number 1, inside pattern measurement number 2, and number 3, the larger picture pattern measure. Now this ends today's tutorial on the bearish continuation patterns, but I would like to offer that I will be doing a video number 2 here on going into our library, and it is going to be looking at live action price action. This is what I like to call my classroom presentation, and now we're going to go look at real market data. Join us if you like. Thank you very much. Come subscribe. I've got lots of great educational material for you. Thank you very much for joining us today.